Hello friends, my name is Dr. Bharath Chandra. Today's video very important for everybody. Possible to expect 15% profits from stock markets. Many investors think making money in stock market is very difficult. It may be difficult to make money in short term, intraday and futures and options. However, it is relatively easy to make money in the long term. It is said that the stock markets are the barometers of the country's economy. The country's economy grows well, stock market will also grow well and vice versa. This is why overall stock market returns in developing countries like India are more than in the developed countries such as US, UK, Japan, etc. Approximate stock market returns is equal to GDP growth of the country plus inflation. India's GDP growth is equal to around 6 to 7% per annum. Inflation 6 to 7% per annum. Stock market returns adding the both comes to in the range of 12 to 14% per annum. Now coming to Nifty returns to corroborate whether what we are saying is true or false. 3rd January 2000, Nifty 1592. 31st March 2022, 17,670. 22 years 3 months, CAGR 11.42. This is in spite of the Nifty level being high in January 2000. Since by October 2000, Nifty level had fallen to 1150. If calculated from Nifty level of 1150, then the CAGR would be around 13.50%. As mentioned earlier, the long-term returns on the index will be 12 to 14% per annum as long as the economy grows at 6 to 7% and the inflation being 6 to 7%. The reason Nifty gives such returns is because it contains 50 of the top companies which operate in more than 22 major sectors of the economy. It is almost reflecting the Indian economy. There are many companies in the Nifty 50 index which have not performed well for many years. If you do good fundamental analysis and shortlist around 10 profitable companies which you can invest regularly and monitor, then getting 15% per annum is not very difficult. The time horizon for such returns should be at least 10 to 15 years. In the initial years, such as first 3 to 4 years, your investment will not compound much and hence it may look like ordinary returns. By the time you see some meaningful returns, it will be at least 5 years. Unfortunately, most investors have patience of only 1 to 2 years and sell all their stocks if they don't find good returns. Please note that just because a company is fundamentally strong, it did not perform well in stock markets in the short term, but it will do well in the long term. There will be years of underperformance. In fact, it is commonly seen that 80% of the stock returns comes in 20% of the time. Since we don't know when the maximum returns will come, we need to hold good stocks for many years. Indian economy is likely to do well for at least another 30 years since currently around 50% of our population is below the age of 20 and large number of people are below 40 years right now. So their hard work and productivity will help India to grow and make us a superpower. The stock markets will follow this trend. It is our job to stay in stock markets for long term. As usual, at the end of the video, there's a general knowledge question. What has been the annual returns from Nikkei index Japanese stock markets in the last 20 years? Type less than 5% per annum, or 5 to 10% per annum, 10 to 15% per annum, or more than 15% per annum. If you are not the member of Dr. Bharath Chandra channel, this is the time to subscribe. Press the bell icon so that the videos will come directly to your mobile next time. Video is good, press the like button, and if you endorse what we are saying, send the video to all your friends and relatives. Thank you for watching the whole video. Bye bye. All the best.